about to do a deep dive into Nvidia shares under pressure today. Joined now by Shana Sissel, founder and president of Bannerin Capital Management. Shana, thank you so much for joining us this afternoon. Always great to hear from you. So let's talk about Nvidia. It's pulled back. It had hit a new high yesterday, but it's pulled back some. What's your outlook for Nvidia for the balance of the year?
Well, I think a pullback is healthy in the stock right now. Obviously, it's had a lot of momentum. It's run up quite a bit. Its valuation is getting a little frothy, but that's also based on estimates which have been way off to begin with. But I do think it's healthy to see the stock pull back. After it split, you saw a lot of the retail market get into the stock, pushing it further. For the rest of the year, I anticipate that it will kind of take a breather right here, and then it will continue its momentum upwards as long as it continues to report very strong earnings as it has, and there's no reason to believe that that's not going to be the case going forward.
Yeah, I mean, I thought the same thing. It seems like a, kind of healthy reaction to where the trajectory Nvidia has been on to take pause, especially you sent over some notes that help kind of frame this historically, because, when you go through this day by day, you forget some of the history of this with Nvidia. The market cap last year, $754 billion, and you think about where it is today. I mean, it's been just a rocket ship since last year, but they just continue to produce these chips that, many say the demand is outstripping the supply anyway. But let's talk about even the rest of the AI leaders over the next few months. Is the expectation for us to continue to see this growth story here?
Yes, I think that that's the case. I think you'll also start to see some second derivative players start to benefit from that. Cisco Systems is a stock that has done poorly. It's trading at a ridiculously low multiple. I have gotten burned on the stock for a while, but I will say that it is a second derivative beneficiary of AI in many ways. And so you'll start to see some of those names start to benefit as we move from the language learning models to actually, the next generation of AI. And we're still very much in the early stages of how AI is being implemented. And there's many different trial and error kind of tests going on, all different industries. And I think there's, so much opportunity here. And so as a whole, I think that we want to be exposed to things that are going to be beneficiaries of that. But I think it's also time to start looking for the next beneficiaries of it and not the most obvious ones like Nvidia and like ARM and things of that nature.
So with Nvidia, before we kind of talk a little bit more about the next layer or the next leg, do you think there's some kind of investor psychology that may be at play here, or if there's some buying fatigue, especially like when you think about the profit margins, where Nvidia is now? Is that potentially a trigger behind some of the profit taking?
Yes, I personally would not sell the stock here. I think this is a long-term play. If you are somebody who wants to hold a stock for the long term, not everybody does. Some people just want to trade it on momentum and opportunity. If you're a long-term player, I think you hold the stock and take advantage of downturns like today to buy on weakness. Now, that said, I think that it's going to be almost impossible for Nvidia to continue to grow at the pace it's been growing. I saw another analyst on another network point out, and I think it's a valid point, that if you were to go backwards a year and look at what the PE should have been for Nvidia, if we had got the earnings right, it would have been like 6 a year ago. But it also grew its earnings 2,000%. And so if you want to look at its current PE, which is about 50 on forward earnings, and say, well, maybe that is not accurate because they're going to do better than that. In order to get to a place where you have to think the stock is cheap, you'd have to assume that it would continue growing at the same rapid rate. And I don't think that is going to be the case. But I also think that we should not be throwing away a stock that is likely to continue to grow over 100% year over year for multiple years in the future.
And Shana, let's talk about, let's widen the conversation and take it to small caps. The leadership in the market has really been about these large cap, these mega cap tech stocks, but small caps have been underperforming. What's going on here? What's under the hood as the drivers for the underperformance for small caps?
I think there's a lot of things going on here, and this underperformance of small caps is not new. It's been going on for quite some time. As we came out of the pandemic downturn, you would expect small caps to do well. They did for a little bit, but for the last couple of years, they've simply not participated in the market rally. And there's a variety of reasons why that may be, but I think it has a lot to do with the financing markets and the ability to access capital as rates are increasing. Now, I used to cover small and mid-cap stocks during my time at Fidelity, and we did a project to see how small caps and mid caps would do in a rising rate environment. And generally speaking, historically, and we had to replicate it because the Russell didn't exist 50 years ago when rates were rising, they did okay, and they should do okay. But I think what we're seeing right now is the way rates went up and how quickly it went up. It made access to capital markets a little more difficult for these companies, which makes it hard for them to grow. They're also not as exposed to some of the most beneficial areas of the market that some of the bigger tech names are. And so for those reasons, that's why small caps have done poorly over the last couple of years.
Yeah, and they continue to be weak. Russell 2000 flat at the moment. Let's talk about some of your picks. You've got a variety of names on your list. You could tell me where you want to go with MRVL, Vertex. Which direction do you want to go with some of your picks? You want to talk MRVL?
Well, sure. MRVL is an interesting name. It's also a chip company, not as exposed to AI, more cloud and 5G. But I mentioned earlier, I'm looking for second derivative opportunities for exposure to AI, and MRVL does fall into that play. So that's one. I don't know if it came in on my notes, but VRT is another one that falls into that bucket. They do cooling systems for these large storage data centers, and those are very important in an AI environment where you have massive computing power and they need to keep the computer systems and the data centers cool. So that's another one that I really like right here that I'm not sure everybody's paying attention to, but again, a second derivative player. And that stock has actually done really well and no one seems to be paying attention. If you want to get out of tech, I have Vertex in there. Novartis, I have Fang. Where do you want me to go with this, Diane? I'll go anywhere you want.
I love the VRT pick, excuse me, had a little frog in my throat there, because you're right, I hadn't paid attention to that. And in terms of looking for a secondary play, so many investors are looking for, okay, what's the next leg that you can chase, because you can only chase the, kind of first layer or the first players in AI for so long before you're not getting the growth that you want. So you're right, these data centers need cooling, so that is an interesting pick right there. So do you want to talk about Vertex a little bit? So that's out of the AI space, that's the healthcare.
Yeah, so I have two healthcare picks on my list. Healthcare has not been one of the better sectors this year, but I have Vertex, which benefits from kind of a best-of-breed cystic fibrosis network of drugs that continues to push that company forward. And then you have Novartis, which, with all of the focus on, Ozempic and all these other weight loss related drugs, no one's paying attention to some of the blockbuster oncology work that's being done over at Novartis that is literally game changing and saving people's lives. So that is a stock that I really like right now as well. And healthcare having not done so well, this is a contrarian bet where I think there's opportunity to buy something at a reasonable valuation and get some pretty decent upside from here.
I like it. We've got both the AI play and the contrarian plays. We'll have to put a pin in our conversation. Shana Sissel, founder and president of Banyan Capital Management. Have a good weekend, Shana.